I have this very important video to discuss with you today. And whether you know this or not, I would like you to watch this video to the end. Now, the question is, when you are asked to buy or sell a currency or a currency pair, what does it mean? What does it imply? For example, you are asked to buy Euro USD, or you are asked to sell Euro USD. What does it mean? In reality, what is it like? What are they telling you? You need to understand that concept. And once you understand the concept of buy and sell, you will come to appreciate analysis. You understand why you are not getting your analysis right. Maybe you've been doing analysis in terms of deciding when to buy or sell. That is analysis. And you always get it wrong. Or you enter a trade, after some time, you see that your trade is in a loss. Is it that you don't understand the concept of buy or sell? Or maybe you understand it a different way. Look, I am not going to talk the grammar that is being talked online. I'm going to tell you in simple steps or in simple plain language what this buy and sell stuff means and what it actually says in real terms. And this is what this video is about. And once you get this as a catch, I am sure your analysis in terms of deciding when to buy or sell will also improve. So take your time and watch this video to the end. Now, let me give you an example. Those who have had one-on-one mentorship with me will testify or will tell you that my introduction video is always on this concept of buy and sell. And once you understand this concept of buy and sell, you are good to go. You have the foundation you need to decide what next. So I am going to share that fundamentals with you. That introduction video or the introduction part of my tutorials, which I give to those who actually pay for one-on-one mentorship, I'm going to give that to you over here, all in this video. So take your time and let's move ahead. Now, let me share my whiteboard with you because it's going to be practical. And so I need to take my time in explaining this. Now, when you are given a currency, like for instance, Euro USD, and you choose to buy or sell, what does it mean? Now, before you can make a buy or sell, let me give you a scenario. Assuming you want to travel to Ghana, I am in Ghana, so you want to come to Ghana, okay? And then you go to the bank to exchange your currency for my currency, because when you come to Ghana, you need to be able to do your rounds and patronize some services here in Ghana. So because of that, you will need to have a currency that will be accepted in my country, which is Ghana. And in my country, Ghana, when you have the dollars, it is accepted. And when you have the local currency, which is called the Ghanaian cedi, it is also accepted. When you also have the British pound, it is accepted. When you have other major currencies like the euro, it is also accepted. So you decide to go to the bank and exchange your local currency for some dollars. So you decide to go with your currency. So let's assume, for the purpose of example, let's assume that you took maybe 1,000 of your currency. I don't know what currency you have. So you took 1,000 of your currency. It could be Naira, it could be yen, it could be whatsoever currency you have. So you took 1,000 of your currency, and then you went to the bank and you were given $100 for 1,000 of the currency that you are holding. So 1,000 of the currency you are holding, you are given $100. Does this make sense? Good. Now, After you took 1,000 of your currency for $100, your trip was canceled, or you changed your mind that you won't travel again. So you kept this $100 for at least a month, 1 month. After 1 month, you felt there was a need to go back to the bank and exchange this $100 back to your 1,000 currency. Are we good? Are we on the same page? Good. So instead of giving you your 1,000 currency again for $100, the bank decided to give you 1,200 for your $100 after 1 month of keeping it. So it means that for keeping the $100 for 1 month, the dollar has appreciated in value, and you now got 1,200 of your currency for the same $100. So it means for 1 month, you have made a profit of what? 200 of your currency. Does this make sense? Because initially you took 1,000 of your currency to go get $100 for a trip, and you decided to change your mind, or you canceled the trip, kept the $100 for 1 month. After 1 month, when you visited a bank again to exchange the same $100, you were given 1,200 of your currency. So it means that the $100 has appreciated in value 200. So you have made profit, right? The same scenario. Assuming when you went to the bank, you were not given 1,200 after the 1 month. You were rather given, let's say, 800 of your currency instead of 1,000. So what it also means at that moment is that you have lost, or the $100 has depreciated in value 200. Because initially, 1 month ago, you bought it at 1,000 of your currency. And after 1 month, you took the same $100 to the bank and you were given 800 instead of 1,000. So it means the $100 bill you kept with you has depreciated in value 200. Does this make sense? Good. It is the same concept when it comes to Forex trading. Forex trading simply means buying and holding some currencies for some amount of time. Please take your time and listen. It is the same concept with currencies. When it comes to currency trading or Forex trading, you are buying some currencies and you want to hold those currencies for some amount of time. Now, that amount of time will come later in the explanation. Because with this scenario, the $100 was kept for 1 month. Maybe you may not be able to keep a currency online for 1 month. Maybe you may be able to keep it for a day, or some hours, or some minutes, or some weeks. We will explain all that. So it is the same concept when it comes to what? Forex trading or foreign exchange. Because what you went to the bank to do was foreign exchange. You went and exchanged your currency for another. And when it comes to foreign exchange, it is the same thing that has been abbreviated to Forex. Because you know the word Forex means foreign exchange. The FOR stands for foreign, and the EX stands for exchange, which is Forex. It is the same concept. The concept hasn't changed, and it is still the same. Now, why am I saying the concept is still the same? Let me quickly explain. When you are given a currency like Euro USD, you are actually thinking of holding a currency, or you are actually thinking of, I want an appropriate word to use apart from holding. You want to actually subscribe to a currency or throw your weight on a currency with the hope that the currency that you are throwing your weight on, or you are subscribing to, or you are going for, will appreciate in value against the other. Just like you took 1,000 of your currency to go for $100 bill. And when it appreciated, you saw that you were making profit. And when it depreciated, you saw that you lost. The same thing with currencies. So when we take Euro USD as a currency pair, you are actually thinking of subscribing to one of these two, because Euro and USD are two currencies put together. And you know, when it comes to currency trading, you are always holding one currency, exchanging it for another. So it's always two currencies involved. And that is why the currencies have been paired, which is now called currency pairs. So you have Euro and then you have the USD, making up Euro USD. So you are thinking of subscribing to one of them and holding on to one of them for an appreciation. Now, when it happens that that currency doesn't appreciate against the other, then it means you are in loss. But when it appreciates against the other currency, just as you thought, then it means you are in profit. Just as I did. You were holding 1,000 of your currency and you went for $100. So at that moment, 1,000 of your currency is paired with $100. Does this make sense? 1,000 of your local currency was paired with $100. So you went with your local currency for $100 with the hope that the $100 that you have gone for, which you are holding on to, will appreciate in value. And when it does, against your local currency, which you went with, then it means you are in profit. But when it ends up that the dollar which you went for depreciates against your local currency, then it means you are in loss. It is the same concept. So at this very point here, we have Euro against the USD. You are thinking of going for one with the hope that the one you are going for will appreciate in value against the other. And at the end of it, you will come out in profit. But when it ends that, or when it happens that that one you went for doesn't appreciate in value against the other, then it means you will end up being in loss. So the question is, when you see Euro USD, it's either you want to go for Euro or you want to go for the USD. If you want to go for the Euro with the hope that the Euro will appreciate against the dollar, then you will buy Euro USD. I repeat, if it happens that you want to go for the Euro with the hope that the Euro will appreciate in value against the dollar, you will buy Euro USD. So when you hear someone say Euro USD is a buy, what they are telling you is that they are going for the Euro with the hope that the Euro will appreciate against the dollar. Now, to make it more clearer, you know that currencies, we have the base currency and then the quote currency. If you don't know that, it's a theory thing. You can just Google and you will know. Always the currencies, for instance, this currency on the right here, the first currency on the right is called a base currency. The one on the right is called a quote currency. I think you should know this, but in case you don't, that is what it is. So when you see a currency pair like AUD, JPY, you know that the base currency is the first one. The quote currency is the second one. Is that okay? So when you believe that the base currency, which is, for instance, Euro over here or AUD over here, okay? When you believe that this base currency here or the one here will appreciate in value against the quote currency, you will buy that currency. So when you hear maybe buy AUD JPY, all that they are trying to tell you is that you want to go for AUD against JPY with the hope that the AUD will appreciate in value more than the JPY, which will end up giving you profit. And then when you hear someone say buy Euro USD or buy whatever currency you might have heard of, maybe GBP USD, GBP CAD, GBP whatsoever, always the base currency. When you hear buy, it means the person is going for the base currency, which is the first currency. And for that matter, Euro over here and also AUD over here. What if you want to go for the quote currency? You believe that the quote currency will rather appreciate in value than the base currency. Then what will you do? You will sell. I'm sure you have given the answer already. You will sell. So when you believe that USD over here will appreciate in value than the euro, then you will sell Euro USD. So it means that once you place a sell for Euro USD, it means you are going for USD with the hope that USD will appreciate in value over the euro for you to make what? Profit. The same thing, when you hear someone say AUD JPY is a sell, it means the person is going for the JPY. You are actually subscribing to JPY, or you are throwing your weight against or on, you are not against, you are throwing your weight on JPY, believing that JPY will appreciate in value over AUD. That is why you are selling. So when you hear buy or when you hear sell, it shouldn't be anything confusing. This is the simple understanding of it. And no channel will be telling you this except this very one here. I must be frank with you. What I'm giving to you here, I don't know where else, but it is here. I have to give you all because you deserve it. You need to know the truth. This forex trading is not grammar. Excuse me, my language, my English is not good. So if it had to do with grammar, I'm not going to be here. But it is explaining the thing in plain language. That is what forex is about, and that is what I stand for. Now, from today onwards, when you hear buy, you know what the person is trying to say. And when you hear sell, you know what the person is trying to say. We are not done yet. Now, there is a call for you to buy Euro USD. Buy. With the hope that Euro will appreciate for you to make profit. What happens? When it happens that the Euro doesn't appreciate against the dollar, what happens? You'll be in loss. When you hear buy on AUD JPY with the hope that the AUD is going to appreciate in the near future, and it doesn't happen like that, then it means you are in a loss. Just as you took 1,000 of your currency to go for $100, and after 1 month, you realize that your $100 you are now holding will just give you 800 of your currency. So at that moment, you have lost 200 of your currency on the dollar for a period of 1 month. This is as simple as that. So when you are hoping or anticipating that a currency will perform better than the other, and for that matter, you are going for that currency and it doesn't turn out to be so, that is when you are making losses. But when it turns out to be as you predicted or you forecasted, then it means you are going to be in profit. Okay. The same way when you hear Euro USD is a bullish trend, because these are terms. When you hear bullish, it means it's on a buy trend. If you hear the word it's bearish, it means it's on a sell trend. Uptrend, downtrend, I think you understand these terms already. We are not done. Now, the question is, how will you know that it is Euro that is going to appreciate in value in the next day, or in the next 2 days, or in the next 3 days, or in the next 1 hour, or in the next 15 minutes, or in the next 1 month? How will you be able to know? Because because it is when you know that you can decide. So the issue of currencies, trading currencies, is not just about just watching what is moving, the movement, and then you join. No. It's not just about watching the currency going up and down, then you choose to buy or sell. No. So Forex trading is not gambling. When it comes to gambling, you just choose with the hope that you end up successful. That's not how Forex is. Forex is actually knowing or doing some research, if I'll put it, doing some research to find out which currency will appreciate in value over the other before you decide to go in for a buy or go in for a sell. So when you get to know that it is USD that will appreciate in value over Euro, then you'll be looking at selling Euro USD. So the question remains, how will you know? How will you be able to tell that it is Euro that will appreciate or it is the USD that will appreciate? For you to know that, it takes something that we call analysis. It takes analysis because you cannot just guess. You need to analyze. You need to do a research before you can be able to take a decision. Now, the research you have to do is what we call analysis. And when it comes to analysis in the Forex market, we have three major analyses. And I think you know them already. We have the fundamental analysis, we have the sentiment analysis, and then we have the technical analysis. It takes these three analyses to decide, or to be able to know, or to be able to come to a conclusion that, okay, Euro USD, it should be a buy because the Euro will appreciate over the USD, or Euro USD is supposed to be a sell because you think the USD will appreciate. So it actually takes research, which is called analysis. And when it comes to fundamental analysis, I know you know that already. When it comes to sentiment analysis, you know it already. When it comes to technical analysis, you know that already. So the question is, which of the analysis are you using in order to come to a conclusion to decide whether to buy Euro USD or sell Euro USD or whatever currency you want to trade? And then the question is that type of analysis that you do helpful? The type of analysis that you do, is it helping you to make the right decisions or it's helping you to make the bad decisions? If you are losing, it means you are making bad decisions. The game is for you to make the right decisions. So if the type of strategy you are using or the type of analysis you are doing or the type of whatever you are doing to come to terms of a conclusion of buying and selling is not yielding profit, then it means you have to look at what else you can do or something new to do, or look for something new. And let me say this, I want you to see this in real face, because what I am about to say now, you need to see this in real face. Now, when it comes to analysis, we have more than 1 million type of analysis out there on the internet. I don't know which one you would have to learn over and over to be able to get to understand whether a currency will appreciate or depreciate, and for that matter, do what you want to do. It relies on you to decide or to research to find out which of this analysis will be good to use. There are more than 1 million ways that people use to come to the conclusion of buying or selling. But if your process or searching for that will be difficult in terms of the analysis, I mean, because you cannot just take Euro USD and buy, you need to analyze. You need to find out if it is fundamental analysis, You know that every currency is tied to its economy. So if you are looking at Euro USD, in actual sense, you are looking at the US economy versus the Euro economy or the European economy. So you are asking yourself, will the European economy do well in the next day better than the US economy? In the next 15 minutes, which economy is going to be doing well? In the next 1 hour, which economy is going to be doing well? In the next week or in a whole week, which economy is going to be doing well? In the whole month or the next coming month, which economy is going to be doing well? So you are looking at the fundamentals. So if one economy is doing well, the currency will also do well. When an economy is doing bad, the currency will also be doing bad. And that is why people look at the fundamentals. They look at the news or data that is released on a daily basis about various economies. For instance, there are major news that the investors are looking at. For instance, NFP, non-formal payroll. Investors are looking at it. They are looking at CPI, which is Consumer Price Index. They are looking at it, which is the same as inflation. Investors are looking at these things because they are tied to the economy. If goods and services are becoming so high in terms of price, it means the economy is not doing well. So if the CPI is bad, or if inflation is going high, it means the economy is not doing well. And for that matter, the currency will also not be doing well. So one will want to compare the US CPI to the European CPI. One will want to compare employment issues, unemployment rate in the US, and then unemployment rate in the European economy to find out. Look at these fundamentals in order to come to a conclusion that, okay, looking at these fundamentals, I believe that this economy is doing better than this. And for that matter, this currency will do better than this. And then they come to a conclusion and say, okay, Euro USD, let me buy. Or Euro USD, let me sell. So there are those who look at the fundamentals. There are those who also look at the technical. They have the tools that will help them to analyze. Or they forget the tools, they look at the chart themselves, they look at the previous history. And then they take decisions based on that. And that is what those who call the smart money concept will call it. Others will call it a price action. Those who call it support and resistance are calling it. Those who, everyone in his terms and the way they look at it. Those who call the indicators will call out for the indicators to do the analysis for them. Those who want to go the sentiment way will also be looking at the sentiment, the position of other traders in the market, in order to take a decision whether to join the majority or join the minority. For instance, Euro USD, if 80% of traders are on a buy on Euro USD and only 20% are on a sell, so 80-20. The question is, will you want to be among the 80 or you want to be among the 20? So there are those who look at sentiment, looking at this figures in order to take decisions. And there are a lot of theories out there with regards to these numbers and these systems and whatsoever, which is called strategies. So the strategy I may be using to approach the market, to analyze the market, may be different from your approach or your strategy of analyzing the market. So as a trader, you need to be able to analyze the market before you take a decision to buy or sell. Because once you press buy, you are saying something. And once you press a sell, you are also saying something. A buy on Euro USD means you are going for Euro with the hope that it will appreciate. A sell on Euro USD means that you are going for the USD, which is the quote currency, with the hope that the quote currency will appreciate. I'm done. I'll see you with more videos. This is just an introduction video that I often give to my one-on-one tutorial whatsoever. Do I call them clients? No, they are my friends. I have just given that to you here. I'm done. I'll see you with another video, hopefully very soon.